Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening, ladies and gentlemen, and welcome to the Smartkarma Forum. The forum is a high-impact weekly live webinar exclusive to Smartkarma Plus subscribers. We discuss the best, highest conviction insights surfaced across the network. The forum is meant purely for informational purposes, does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers, and Chatham House rule applies. Every week, we take video recordings of 3 key ideas that were discussed at forums and present them as videos on our YouTube channel. These allow you to revisit forum conversations at your own time and pace and also share them with friends. This week, we will look at Alibaba, one of the largest tech stocks in Asia. We will then proceed to AEM, which is a Singapore-listed mid-cap and has been a subject of prior forum recordings. And then we will also revisit Grab, which is a Southeast Asia unicorn that was listed about a year ago. Let's kick off with Alibaba. Alibaba is dual listed with the ticker BABA US for the US listing. It's also listed in the Hong Kong market. This is a $200 billion plus market cap. And as you can see from this chart, it's very beaten down. Today, we will explore the insight written by Eric Chen on Smartkarma. I think we all know what Alibaba provides. It is really an internet infrastructure, e-commerce, and online finance giant. The stock has declined tremendously over the last year due to regulatory concerns, but also slowing growth. Eric notes that the bottom line for the company is about to reverse an 8-quarter downtrend, and that will begin to happen around September of this year. And that's due to disciplined capex as well as cost cutting. In the meanwhile, the competitive landscape for Alibaba has also improved thanks to regulation as well as maturing businesses of the rivals. Strong US dollar, unfavorable geopolitics could certainly be a dampener, but from a valuation perspective, at 8 to 12 times PE, you would be getting 30% upside in the next 6 to 12 months. That remains very compelling. Let's move on to AEM. The ticker is AEMSP. The market cap is just under $1 billion. We would call this a small or mid cap in the Singapore context. And Nick Van Broekhoven covers this closely on the platform. For those of you who are not familiar, AEM designs and manufactures semiconductor equipment, tooling parts, and components. They just reported the best ever quarterly as well as 9-month results ever. Yet investors remain very concerned, even skeptical of the outlook for the next year. Meanwhile, the management has reiterated its guidance and provided a fairly bullish outlook for the coming years. We expect AEM to land several meaningful new client wins in the next 12 to 18 months, which will reverse the skepticism of investors. Nick notes that EPS is likely to reach at least 42 Singapore cents, leaving the stock trading cheaply at only 7.8 times PE. Finally, we will look at Grab. This is again a $12 billion plus market cap company listed in the US. Grab runs a prominent delivery business, ride-sharing business, as well as financial services business. It purportedly reported strong third-quarter results, where revenue grew 140% year-on-year to $380 million. And it also noted the break-even of the deliveries business. However, there is tremendous uncertainty still around how much the current take rates could sustain with the recent reduction in incentives that they pay out to the providers. We also note that the share price reaction to these results was fairly muted, and the stock remains down 57 to 60% for the year, as long-term profitability is still a question mark. As such, we continue to remain sidelined and do not recommend making a rushed entry. With this, we're going to direct you to the Smartkarma platform, where you can continue the conversation directly with the various analysts and insight providers. Thanks very much, and hope to speak to you next week. Cheers. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.